Come on, are you really telling me that Meta's value as a company has over doubled in a matter of 3 months? Meta, like so many other companies in tech, have announced major layoffs. They said the same thing everybody's saying. We thought things would be a lot better than they did. We overhired. It was a mistake. Do I necessarily believe that story that Meta and everybody else is giving? I don't know. I feel like it's a nice way of saying, hey, we screwed up, but we expected things to be good, blah, 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 blah. Mo, what are you seeing?
So this story came out over the weekend that they are going to be delaying setting their budgets and everything because they need to figure out what is going on into the future. I think a lot of companies are going to come out and start saying this.
Yeah, because, you don't want to be the company that comes out there and just starts slashing jobs like, this jerk that you're perceived to be.
Right. And plus, a lot of companies, they don't know the direction that they're all saying. It's an unknown economy going into the future. I think they can all play off of this.
Right. So I'm going to pull up Meta here in our stock analyzer tool just to get an idea. So it's up. Mo, why don't you pull up the chart on Meta? Because this is something interesting we were talking about before we started recording videos today.
Yeah. So Meta has been, as you can see, it had that big earnings jump where it was up 30-some% in the day. And in the last 7 or 8 market days, it's basically gone from 200 to almost 170. Today, it's sitting at about 178. And for those of you that like charts or kind of enjoy seeing what technicals do, when you have something that just goes straight up like this, it's going to come down. That's just how it works. But I'm saying that I want to see a positive stock price. And today, we're seeing plus 2.25%. You want to see these, this is what I was telling Paul, you want to see when Meta comes down and rebounds in price. So on Friday, I was saying, please, Monday, give me a positive day on Meta, even though I want this thing to come down. Because I want it to create that new little support resistance level where it has a very difficult time pushing back up. So it's just a little nuance. I don't know if it's going to work, but I like seeing that today's positive.
And why do we want lower prices, Mo?
Because I want to be able to buy this thing at a much cheaper price.
That's exactly it, guys. That's exactly it. We want to buy Meta at much lower prices, just like every other company out there. If that sounds different to you, if that's something you never thought, it's amazing to me that I always joke with people and say, literally stocks and investments are the only things in the world that people enjoy paying higher prices for.
It's amazing. It's amazing when people will say, hey, I got a deal on this, I got a deal on this. And I'm like, what about the stock you just paid for? Well, that doesn't matter. It's not the same thing.
Well, they won't say that. Like, oh, I got a deal on it. But their perception of a deal is as the price goes higher because their thought is, hey, I caught it on the way up. It's incorrect.
Meta's probably not the best example because it could fall into value range, but paying 200 up here versus this is not a deal in relation to this. We want this thing down in this 150, 140 area, but Meta's probably a bad example. I wanted 50. Meta's probably a bad example.
November 4th, Meta was at $88.
Yeah.
Right?
Yeah.
And it was $236 in April of last year. What did it get to recently in the last?
February 2nd, it hit an intraday high of 197.16.
Guys, from $88 on November 4th to $198 on February 2nd? Come on, are you really telling me that Meta's value as a company has over doubled in a matter of 3 months?
And not
because of fundamentals?
Exactly. And even on this earnings reaction day, it went from 150 to 197. So the company changed 30% of value because of earnings report.
By the way, didn't they miss?
They missed.
So that's
miserably.
The key. This is the key, guys. We want everybody to remember that stocks are irrational. Mr. Market is telling you every single day, based on being a good mood or a bad mood, what price to pay. They're telling you, hey, I'm going to pay. You can either buy the stock from me for this, or you can sell me your stock for this. You have to decide if it's rational or not. That is the hard part about investing. It's deciding when a stock keeps going down, that it's a good value. But you look at companies that we did in the past, that all these other hypesters on YouTube talked about, and said, hey, Peloton, these are all great stocks, Workhorse, Nikola. And we're like, no, they're not. They don't fundamentally make sense. And as they go lower, some of them have come into an area where like, oh, this is getting interesting. The difference is when our stocks go down, we go,
yeah.
Unless the story has changed, we're excited.
Another thing is when this was their earnings per share miss by 22%. You also have to be able to not chase the stock up.
Yeah.
Because we heard a lot of people saying, oh man, we're missing it. This thing's just going to keep going higher. And you can see it's not going to keep going higher right now.
Yeah. So a couple things on Meta. A couple things I like. First off, market cap of 470, enterprise value of 515. Very little debt.
Yeah.
Look at this return on invested capital, 16.3% for the last 5 years. Even with higher expenses, it's 12% in the last year. Free cash flow, it's down, but they're investing a lot in this metaverse. This metaverse cost them $13 billion in the last year, with $350 million in revenue off it, or something like that. Guys, this is going to be a loss. This is going to be a loss for a long time. And for those of you who say, well, what if it doesn't work? Well, then they stop it and they add $13 billion to the bottom line again.
I'm interested to see if they get into this chat AI stuff too.
Oh, I'm sure they will. Listen, to me, if anywhere is going to need it, it's going to be Facebook and Instagram, where they can use this stuff to generate more ad revenue.
Yes.
Now, Facebook and Instagram and WhatsApp are not growing by leaps and bounds. However, what is growing is their ability to make money off of it. If you go look at the revenue per user in the US for Facebook and Instagram versus the rest of the world, it is a night and day difference. Why? Because the rest of the world is not as wealthy as we are. And as the rest of the world gets wealthier and wealthier, that per user revenue is going to grow a ton.
That's another important thing that's growing, is the rest of the world is getting more developed. So you're taking this little circle and expanding it, and that only benefits Facebook, Instagram, WhatsApp.
Yeah, because people are going to keep doing more and more.
Metaverse.
By the way, I use Facebook every day. I use Instagram every day, and I use WhatsApp every single day. Mm-hmm. In fact, we're the only country in the world where we don't use WhatsApp. Everybody else, whenever I go to another country, so we have houses in Mexico, and I travel a lot.
In Turks.
The first thing is, hey, what's your WhatsApp? Like, let's connect on WhatsApp.
Yeah.
First thing.
Yeah.
That's with iPhone users.
iPhones.
Yeah.
Yes, that's exactly
I used to date a female in Mexico, and it was funny because she had an iPhone, and she's like, yeah, I've never used iMessage. I'm like, come on. She goes, no, we just use WhatsApp.
Amazing.
I asked Nestor, our manager in Mexico once, just randomly 2 weeks ago, Nestor, what percentage of your friends do not use WhatsApp? He goes, 0%. They all use WhatsApp. Yeah. It's just the way. Now, how do they make money off that? I don't know. They're figuring that out as time goes on. But the point is, the stickiness of all the users. 3.5 billion people in the world use their services on a monthly basis. Yeah. That's huge. It's about converting that to more cash flow.
Right.
Let's check out the 8 pillars on Meta. It's an 8-pillar thriller.
It sure is.
Look at that. They announced a $40 billion buyback. They're getting a lot of criticism for that. Well, how can you cut jobs and do a $40 billion buyback? Guys, totally different things. Totally different things. And the fact that people are taxing the buybacks just makes me shake my head. It's just overreach. They're already going to get tax revenue on the people who sold the shares. Because Meta has to go to the market and buy shares from people. Buy shares from you and I.
Don't think about it that way.
How do I think about it then?
Not that way. The way that, don't worry about it.
Mo's being sarcastic.
Yes, I am being sarcastic.
All right. The debt level, they can pay off their debt with 1.39 years of the last 5 years of free cash flow.
That's incredible.
Everything's growing here.
Yes.
5-year PE, 5-year price of free cash flow is 20. 5-year PE is 17.8. Okay.
These are pretty good numbers for a dead company.
Yes. All right, so here are the analyst estimates on Meta. So this dying company is still expected by analysts to grow their earnings per share every year, except for that last year when there's only 6 analysts following it. Okay, that's interesting to me.
Sure is.
Revenue. This dying company, according to analysts, has revenue growth in the high single digits. Again, not huge, but for such a large company that already has 3.5 billion people in the world using their stuff. Guys, this is the important part. And as they grow their revenue, here's what I like the most. Look at their gross margin. 78%. That means that they kept their overhead the same. Every extra dollar before taxes that they generate in revenue would be 78 cents of profit. That's the key. That's where I look at the play on Meta. So the market perception right now is Meta is not a good company. So the question becomes, is it selling for a reasonable price after this big run up? So let's go to our stock analyzer tool. Now, You guys heard me talk about it again, over and over, 1.3 million people, 1.3 million uses of this by our software community. Guys, the big key here is the community. Thousands of people in here. Investing can be scary because the way to be a good investor is when stock is falling, that you sit there and stay calm and say, is it fundamentals or is it Mr. Market misperceiving something out there? Mm-hmm. That's the hard part. That's what the software can help you do, especially with the community, to chat with people. So we're running a special, $7 for 7 days on our software. You get all the software here, plus all these tools up here. All can make your life a little bit easier when it comes to money. $7 for 7 days. And we're increasing the price of the software soon. So sign up now so you get locked in. Now, I'm going to do a 20-year analysis. Mo's going to do a 10-year analysis because Meta is the kind of company that I'd want to own for a very long period of time for the foreseeable future. So revenue growth over the next 20 years, and Mo's going to do 10. Let's see. This is kind of hard. That's the point. It's supposed to be hard, right? If it was easy and just plugging in numbers, we would just do it all the time the exact same way.
Right.
All right. PE.
Let's see how this goes.
Are you already done?
Yeah.
So Mo, give us your revenue growth numbers.
So I put in 6, 9, and 12, and I recognize that 6 can be a little low, but they had quite the revenue jump in the past couple of years. Now it's stabilizing, so but who knows if it stays at this level. So
Well, but
6, 9,
again,
and 12.
if you believe, like for me, 20 years, I'm like, okay, how wealthy is the world going to be in 20 years?
Exactly.
If they're able to make Meta work
Yeah.
and do all these other things,
Yep.
can I see 11% growth rate?
Yes.
Absolutely.
Yeah,
But I put a minimum of 5%.
Yep.
Things don't go as planned, but
Right.
they still get inflation with it and income growth internationally.
Right.
Okay, so I did 5, 8, and 11.
So profit margin, I went 27, 30, and 33.
Okay, I did 24, 28, and 32. Now, why did I go so low on 24?
I don't know.
I think I was probably being a little dramatic.
Okay.
So I'm beating this up quite nicely. Free cash flow margin, what'd you do?
I did the same numbers, 27, 30, and 33.
So I did 24, 27, and 30. I went a little bit lower.
Okay.
Now, PE and price to free cash flow.
16, 17, and 18.
I did 15, 16 and a half, 18. And for your desired return,
I did 10, 11, and 12.
I did 10, 12, and 14. Now, guys, because I beat this up so much, that's why I put in 10% at the bottom. Because I'm okay. If somebody told me today, Paul, this is what Meta is going to do for the next 20 years, I'm okay making 10% on that one because I think the balance sheet justifies it. To me, that's a very low risk investment.
Yep.
As long as I'm okay with volatility.
Correct.
So
I've seen.
hit the analyze button. Mo, give us your numbers.
228 to 406, middle ground 306.
200 to 350, middle ground 260 to 290. Guys, these are different numbers every time. I have it on my watch list at 160, only because I'm being a little greedy. Thank you very much, guys. Subscribe to our channel. Appreciate your time. Everythingmoney.com.